Prices can't go any higher in the real estate market, right, Don?
Well, let's find out if that really matters right here on the National Real Estate Cafe, where you get your daily dose of real estate and financial market updates.
All right, so we teased that a little bit because the reality is prices are only part of the equation. I think one of the things that's happened over the last 50 or 100 years in the market was look over here so you don't see what's happening over
The
here.
magician.
So I think we have sometimes the wrong focus, and we've been focused on price, focus on price, focus on price. Well, price doesn't mean much.
Well, especially when you see prices going up, a lot of you, I guarantee a lot of you sit around the water cooler, if they even have those these days, talking about
No, they sit around the Keurig.
Oh, there you go. And basically talk about how I'll never be able to afford a house because prices are going up too high. I can't afford it. We have good news for you today. We have this great article to share with you.
I hope prices continue to go up, Don, if they're going to continue to go up in this manner.
There we go. So forget about the price of home. The cost is what matters. We talk about this all the time for years and years and years. So here we go. Yes, have prices gone up? They've been going up over 3% over the last year, and they're projected to go up 4.5 to 5.6% next year. So how can you purchase a home?
Well, first of all, why would prices continue to rise if they're already at the top, Don? I know that's not in our slide, but let's talk about that for 2 seconds. One is the lack of inventory. Same old thing. It's like economics 101. I must have been like 18 years old, and they were like, yeah, supply and demand.
Yep.
Still holds true today.
That's true. So because we didn't have any homes being built for 10 years, we're still short on housing supply. Yes, they're building homes as fast as they can, but there's also a bunch. Millennials are pumping out babies as fast as they can, too. So we have a lot of, we're really behind. So prices will continue to go up. So we have good news. So right here, home prices in January of 2019, basically prices have gone up from the median sale price, $21,100. This is just using the medium sale price.
That sounds pretty significant, Don.
It is. It is.
You mean somebody that bought something 5 years ago would have made $100,000 on a $400,000 house?
We keep telling people to do that.
Oh.
Oh, yeah.
There's that.
All right, here's the other piece, the big piece of the pie. Mortgage interest rates have gone down almost a full percent, 0.85 percentage points. Doesn't sound like much, only a percent, But that equates to, based on average sale prices and loan amounts, to $40,200 less
in costs.
In costs.
Per year.
Per year.
That's
huge. Right. And well, that's just in 8 months.
Wow.
Not bad. And wage growth has continued to go up. We're seeing about a 1.5% higher wage growth. Bottom line is you've increased your income on the average $5,600.
Okay, so let's talk about for wage growth for 1 second, because wage growth is one of the things that we look at to see if we're going to have a lot of inflation. And we are seeing normal, healthy wage growth. That means that not a lot of inflation is on the horizon. And if there's not a lot of inflation on the horizon, rates might stay low a little bit.
It also helps keep spending down. When you start making so much more money, you start spending much more money. If you're making a little bit more money, well, you're
just keeping up.
You're keeping up with inflation. And therefore, the balance, this is working.
Yeah, this is why we've had the longest economic expansion we've almost in history, because we've been able to keep a tame market. And I'm actually going to applaud the Fed on this.
I'm going to, they're doing their job.
We talked about, I think it was, I don't know, 7, 8, 9, maybe almost close to 10 years ago about the Fed trying to navigate a soft landing. They've done it.
Yeah, well, they're moving quicker instead of trying to wait. So that's helping us. And they're realizing how they can manipulate the market a lot more, and that helps us. Here's the beautiful thing. I love this chart. When we found this was really cool. The impact these market factors. So look at this. Okay, home prices went up 5.7%. Gino, I lost $21,300 in purchasing power.
Oops.
But mortgage rates going down almost a full percent. I gained $40,200 in purchasing power. Plus my wages went up.
All right, so what does that mean? Where we're at?
I gained $24,500 in purchasing power, which is even higher than what prices went up.
So what that means is that affordability is better today than it was 12 months ago.
Oh, by far.
So homes are much more affordable. And we don't have this chart today, but we've had it before, and we'll have it again, is we're also not even close to affordability levels that we were at the peak of the last market. We're like 14% off from that still.
Right.
So when you ask if this market still has room to run at these interest rates, it does.
That's right. So good news. So since you got this good news, share it with your clients, share it with your friends, and make sure you receive this great information on a daily basis by going to donandgino.com. Subscribe to our YouTube channel.
That's my favorite. Just
That's
subscribe
right.
to the YouTube channel.
And get this great information on a regular basis. Thanks for tuning in.